Ed Lawrence, thank you so much. For more on this, we're joined by O'Leary Ventures Chairman Kevin O'Leary. Kevin, before I let you talk, just listen to what Treasury Secretary Scott Bessent told Larry Kudlow a short while ago about how much the Fed could cut in September. Take a listen.
We've seen with these big economic revisions, and I'm sure we'll come back and talk about poor quality of data, because if we'd had the original numbers, Fed could have been cutting in June, July. So I think the real thing now to think about is, should we get a 50 basis point rate cut in September to make up for the delay and the lack of data? And, again, back to these CPI numbers are fantastic.
Kevin, how do you see it? And could a 0.5 percentage point cut juice the economy, like through home equity lines of credit? Cheaper money is good.
Yes, it always is, but that's not what the market thinks right now. I mean, job owning the Fed, bashing the Fed, every administration does that. Every administration wants lower interest rates, better for housing, obviously, and many other things. Unfortunately, Powell is going to remain independent, knowing that his term is coming to an end. There's no way to beat him up at this point. He's not going to be around that long. The market thinks there's over a 90% chance for a 25% or 25 BIP, 0.25% cut in September. That's highly likely, and that's what the CPI data gave you. But there's a whole lot of people out there that say the full impact of tariffs has not been felt yet, and they want to see more data. Now, you got to sit on where you stand. I mean, you don't know if there's going to be inflation coming through, particularly on the CPI, on consumer goods and services, because of tariffs. And so I think 25 basis points is likely. But, if you talk to fixed income managers, as I did today for an hour, trying to figure this thing out, I'm just like every other investor. How long do we go duration here? We're thinking we're not going to get big cuts this year. We're going to get 25 bips, maybe 50 bips. That's it.
I'm going to do something nice, Kevin. I'm going to give Powell the benefit of the doubt just for a second. Bear with me here. Okay? And I'm going to say maybe some of that inflation does come through in a report or two down the pike as this whole tariff situation starts to really play out in real time. Having said that, we still saw energy prices go down. That was in part what kept that headline number stable year over year. Food prices are not going up. You're seeing those real wages go up. By the time the tariffs hypothetically kick in, you might see some of the growth engine from the Trump economy, from the big, beautiful law. You might start to see some of the effects of deregulation that, help the economy in that regard. So all of those things considered together, we'd still be in a pretty good place. Would the Fed still have a case to make just because the inflation number rises a little bit to stay put?
Well, the Fed has some other data, real data from credit cards 48 hours old, showing a very strong consumer. Employment still good, wages going up. Those are indicators of a strong, buoyant economy. You don't cut into that. That's just not traditionally what happens. You don't cut rates when the economy is still in great shape, and the economy still is in great shape. And, for all of the concerns about April 3 and the market going down, it came all the way back and then some. There's productivity enhancements coming from AI. Every company's talking about that. There's a lot of good news that keeps things buoyant. And, the only fight you could have, if I were Trump, what I'd be saying is, how come Europe has 2.1% and we're 200 basis points higher than that? How come Japan on investors is 50 basis points, 0.5%? And, we're offering people 4% on treasuries. I mean, there's an argument, except their economies suck compared to the U.S. economy. And I mean, that's basically the problem. We're not hurting. And so the Fed's saying to themselves, we're not hurting. Why are we cutting rates? That's the problem. You got good and you got bad, and then you got the Fed, and you're whacking the guy in just a few months. So he's not saying I'm flexible. He's saying I'm getting whacked. I'm going to cool my jets. I'm going to do what I got to do.
Well, I just, before Jackie moves on to the next thing, I just wanted to point out that our budget deficit was $291 billion and was up 10%. the interest on the national debt was more than 3 times what we brought in tariff revenue for the month. And so far, year to date, fiscal year, our interest that we've paid out, gross interest, is north of $1 trillion. It's going to be the second biggest line item after Social Security, and north of $1.2 trillion. So we're in a world of hurt unless we get our financial house in order. But go ahead. Speaking of down the toilet bowl we go.
Yes, that's a good way to put it. Let's turn to this, Kevin. Socialism rising in America's business capital. That's here, New York City. New polls showing that Zohran Mamdani is leading the New York City mayoral race by double digits. 19-point gap between him and Andrew Cuomo right now. But perhaps even more alarming, he's getting support from nearly a quarter of conservatives, 23%. 18% of conservatives are behind Cuomo, 9% behind Adams, and 40% behind Curtis Sliwa. But I'm just shocked by the conservative percentage that would vote for a socialist. I don't get it.
Well, let's remind ourselves of something. We have a case study we can go back and look at. Those are almost exactly what the numbers looked like early in the presidential race when Kamala Harris came out and also didn't talk policy. So Mamdani doesn't talk policy. He just talks rhetoric, and I understand why, offering free everything for everybody. But that is a quasi-socialist communist idea. And let's not forget something, and I believe this to be the case in the heart of all New Yorkers. Where did the Statue of Liberty come from and be placed? In New York, when all those immigrants fled from socialism and communism. They came to America for the American dream. They landed in New York. It's the essence of inspiration and aspiration. And I think at the end of the day, the more you listen to this guy, and I don't blame him for his marketing strategies, but we're talking quasi-socialism, communism here. Mm-hmm. That's not in the vibe and the heart and the essence of the DNA of New York. New York in the 20s, 30s, 40s, 50s was the birth of the American dream. Mm-hmm. And whoever's going to take this guy on should bring forward that metric, because that trumps everything. And I don't mean Trump, I mean above all things. Because you can bash Trump all you want. He's on his Trump bashing tour. And that's okay. It's a great marketing strategy. But do you really want to look at the Statue of Liberty and say, screw you? You're not the American dream anymore? I think by the time this election is over, and I hope to meet with this guy before it happens, because I think a lot of his rhetoric is BS. I want to hear what the real policy is going to be, because he's not going to raise any money for development of low-cost housing with this policy. And I'm not the only person that believes that. He can talk to any investor. He doesn't want to talk to me, talk to somebody else. But right now, it's full-on rhetoric, and I remember that metric in the election. And then a few months later, we had the election, and people came back to what matters in America, the American dream, capitalism, making it happen for your family. That is the essence of New York. I think this guy is going to get drop-kicked by the Statue of Liberty. Poof, he'll be gone.
I will dream about that and wake up with a smile on my face tomorrow morning. Kevin O'Leary, thank you so much.
Take care.